Have you ever tried to balance a whole bunch of stuff on a tray and make sure nothing falls off?
Oh, yeah.
That's kind of what I always think of when I think about accounting, especially when it comes to debits and credits.
Right.
They're like these fundamental building blocks, but sometimes they feel kind of mysterious.
Yeah.
But get ready, because today we're going to go on a deep dive. So we're going to demystify debits and credits once and for all.
It's a great analogy because at its heart, accounting really is all about balance.
Mm-hmm.
And the foundation for all of that balance is something called the fundamental accounting equation, which is assets equals liabilities plus equity.
Okay.
And that equation's like bedrock. It always has to be in equilibrium.
So assets are what a company owns.
Right.
Liabilities are what it owes to others.
Mm-hmm.
And equity represents the owner's stake in the business.
Exactly.
So it's like this constant balancing act.
It is a constant balancing act. And every single business transaction impacts that equation no matter how big or small. And that's where debits and credits come in.
Okay.
They're the tools that we use to record those changes and make sure everything stays balanced.
Okay, so we've got this balancing equation. We know that every transaction has to be recorded.
Right.
But here's where I always get tripped up.
Okay.
Debits and credits, they don't always mean increase or decrease, do they?
You hit on a very key point.
Okay.
The words debit and credit don't actually inherently mean add or subtract.
Okay.
It really represents which side of the accounting equation is being affected.
Gotcha.
So context is super important.
Okay, so it's not as easy as debits always mean something going up and credits always mean something going down.
Exactly.
Okay.
Let's look at an example. Think about your bank account. When you deposit money into your bank account, your account balance increases.
Right.
So in accounting terms, we would record that as a debit to your cash account.
Okay, but why a debit if my cash is increasing?
Well, because we're focusing on the asset side of the equation. So a debit in that case means an increase in assets.
Okay, I think I'm starting to see the light here.
Okay, good.
So if I were to withdraw money from my account, then my cash would decrease. And that would be recorded as a credit.
Absolutely.
Okay.
So a credit to your cash account signifies a decrease in assets.
So it's not really about pluses and minuses. It's more about understanding which side of the accounting equation is being impacted.
It's all about maintaining that balance between assets, liabilities, and equity.
Gotcha. So how do we keep track of all of this?
Right.
It seems like it can get really confusing, especially when debits can sometimes mean increases and sometimes mean decreases.
Yeah, there's a very helpful mnemonic that people use,
Right.
and it's called DEALER.
Dealer, okay.
Which stands for drawing expenses, assets, liabilities, equity, and revenue.
Okay.
And the first three DEA increase with debits.
Okay.
And the last three LER increase with credits.
Gotcha.
But remember, this mnemonic is just a starting point.
Yeah, it seems like you really need to understand the context of the specific account that you're working with.
Yes, you have to.
You have to know what that account represents and where it fits into the big picture of the accounting equation.
That's really the key to mastering debits and credits.
Yeah.
It's not about just memorizing rules. It's about understanding the logic behind them.
Okay. This is already making a lot more sense.
Good.
So tell me, how does this all actually work in practice?
Yeah, okay.
Can we walk through like a real life example?
Sure. Let's say a business purchases a new piece of equipment using cash.
Okay.
How would we record that?
Okay, so they're gaining a piece of equipment, which is an asset,
Right.
and they're losing some cash, which is also an asset.
Mm-hmm.
So we need to show both of those changes
Yes,
while keeping the equation balanced.
exactly.
Okay.
So the equipment account would increase because the business now owns more equipment.
Right.
So to show that increase in assets, we would debit the equipment account.
Okay. And on the flip side, their cash count would decrease because they used cash to buy the equipment.
Yes,
So we would credit the cash account to show that decrease in assets.
you got it.
Okay.
And that's how we keep the equation balanced.
Okay.
The increase in assets from the equipment is offset by the decrease in assets from the cash payment.
This system is pretty clever when you think about it.
Yeah,
It's like a built-in checks and balances system to make sure everything adds up.
it is. And that's the power of double entry bookkeeping.
Yeah.
With its debits and credits, it's designed to give a more accurate and reliable picture of a company's financial health.
That's pretty cool. Okay, this is starting to click for me, but I have to ask, how does this apply to someone like me who isn't running a business?
Right.
Do I really need to know about debits and credits to manage my personal finances?
That's a great question, and the answer is yes, absolutely.
Really?
Yeah, it can be really empowering.
So I could actually use debits and credits to keep track of my own money.
Think of it this way. Your bank account is essentially an asset.
Right.
When you deposit your paycheck, you're increasing that asset.
Right.
Using the logic we've discussed, that would be a debit to your cash account.
So if I go out shopping and buy a new pair of shoes with my debit card, that would be a credit to my cash account since my assets are decreasing.
Exactly.
Yeah.
And just like a business categorizes its expenses, you can do the same thing with your spending.
Okay.
You could have categories like food, housing, entertainment, and so on.
Wait, so you're telling me I could create my own little accounting system for my personal finances?
Absolutely.
Using debits and credits to track where my money is going?
Yeah, and by doing that, you gain so much more insight into your spending habits.
Okay.
You can see exactly where your money is going each month.
That's amazing. It's like having financial x-ray vision.
Uh-huh.
I can see how that would be so helpful for budgeting and just being more mindful about my money.
It's taking those core principles of accounting and applying them to your own life. And suddenly those bank statements and credit card bills become so much easier to understand.
It's like unlocking a secret code to financial literacy.
Right.
Instead of just like blindly spending, I can actually see the impact of my choices on my overall financial well-being.
And that's what makes understanding debits and credits so powerful.
Yeah.
It's not just about crunching numbers for businesses. It's about giving individuals the tools to really take control of their own finances.
So even though most of us aren't accountants, learning these basic concepts can really change the way we think about money.
Absolutely. It's like having a new lens to view your financial world.
I have to admit, when we started this deep dive, I was a little bit skeptical.
Okay.
But this is actually pretty fascinating.
Yeah.
It's like all those like confusing numbers on my bank statements are starting to make sense.
It's all about making those connections and seeing the bigger picture. Debits and credits might seem like technical jargon at first, but they're really just tools for understanding the flow of money. And that's something that affects all of us, whether we're running a Fortune 500 company or just managing our monthly budget.
You mentioned that double entry bookkeeping is designed to help prevent errors.
Right.
But I'm guessing it's not a foolproof system, right? I mean, mistakes can still happen.
You're absolutely right. Even with the best systems in place, human error is always possible.
Okay.
And unfortunately, there are times when people intentionally manipulate financial records for their own benefit.
So even though debits and credits are really useful tools, we need to be aware of their limitations.
Right.
It's not just about blindly following the rules. It's about understanding what they represent.
Yeah.
And being able to like interpret financial information critically.
Exactly. Financial literacy is so important. It's about empowering people to ask the right questions, to dig a little deeper, and to not just take things at face value.
So it's not just about memorizing dealer and knowing which accounts increase with debits and credits.
Right.
It's about using that knowledge to make informed decisions and to be like a savvy participant in the financial world.
Precisely. It's about understanding the story behind the numbers.
Okay.
And that can truly lead to financial empowerment.
I love that it's like taking all this like seemingly technical information and turning it into something that can actually like improve our lives.
Absolutely.
So before we wrap up, I'm curious, is there anything else that people should keep in mind as they kind of embark on this journey to understand debits and credits?
Well, like with anything new, it takes time and practice.
Yeah.
Don't get discouraged if it doesn't click right away. The more you work with these concepts, the more intuitive they become.
So don't be afraid to experiment.
Exactly.
Take a look at your own bank statements, try categorizing your expenses, and see if you can start to see the world through the lens of debits and credits. Who knows? You might even find it fun.
You might. And remember, there are tons of resources available if you want to delve deeper.
Okay.
Books, websites, even online courses can help you master these concepts.
It's like learning a new language. At first, it might seem like a bunch of gibberish.
Right.
But with some effort and dedication, you can become fluent.
And once you do, it opens up a whole new world of understanding.
Wow. It's amazing how something that seems so intimidating at first can actually be pretty empowering.
Right.
Once you kind of break it down.
Yeah.
So to recap, we've learned that the fundamental accounting equation, assets, equals liabilities plus equity is like the cornerstone of accounting.
Yes.
Every transaction impacts that equation. And debits and credits are the tools that we use to keep everything balanced.
Exactly.
And we also saw how understanding the context of the accounts is crucial.
Absolutely.
for understanding debits and credits.
Yeah, it's not just about memorizing the rules. It's about understanding the logic behind them.
And the coolest part is that we discovered that these concepts aren't just for businesses.
Right.
They could be applied to our personal finances as well. So we can track our spending, create budgets, and gain a much clearer picture of our overall financial health.
Exactly. It's all about taking those core accounting principles and using them to make more informed decisions in our own lives.
So the next time you see those words, debit and credit, don't let them scare you.
No.
Embrace them as tools for understanding the flow of money.
Yeah.
Whether it's in the business world or even in your own wallet.
Here's a final thought for you to ponder.
Okay.
As you go about your day, try to see the world through an accounting lens.
Okay.
Think about the transactions that you make, the money that you earn, the bills that you pay. Can you break them down in terms of debits and credits?
Right.
Which accounts are being affected?
Okay.
Challenge yourself to see the connections,
Yeah.
and you might be surprised by how much clearer the financial world becomes.
That is a fantastic challenge.
Yeah.
And remember, understanding debits and credits is a journey, not a destination.
Right.
It's about continually learning and exploring. And who knows, you might even discover a hidden passion for accounting along the way.
You never know.
Well, thanks for joining us on this deep dive.
Yes, thank you.
Until next time.